All right. Good afternoon, everybody, and welcome to yet another interesting session. If you open the news this morning, chances are you would have seen three things: another FTA in the making, a news war headline, and another energy price chart which is showing some dramatic results. Right. So, welcome to energy trading in 2026. This has become a reality now. Decades back, energy trading was all about getting the cheapest molecules. Today, it is all about surviving the next news headline. And this has been the affair of global energy trading over the last 1.5 years, impacted by macro, geopolitics, and whatnot. So, what does the market look like today? You have Brent, where we have seen a drastic reduction, probably one of the only few post the pandemic. LNG supplies are changing worldwide, and biofuels, green hydrogen are no longer just policies but now a reality. Who else is better placed to then explain what's happening in this space than our esteemed panelists? That's the reason we are calling this session Duties, Deals, and Disruption. Without further ado, let me introduce the panel to you. We have Kiran, who is the head of Asia Vitol. Next, we have Patrick, who is the vice president of LNG trading in Total Energies. Sachin is the CEO of Trafigura India, and Fabian is a executive vice president of Asia Cefe. I'm your moderator for the session, Manan Shah, partner with Carney. So let's really dig into the key questions and topics of interest, right? So Kiran, maybe I'll start with you.
Sure.
Over the last year, we've seen Brent has really seen quite a volatility. In fact, the prices have gone down, steep fall of almost 10-15%. How do you see this geopolitical landscape evolve in 2026? And for Indian refineries and trading houses, are there opportunities that open up?
Yes. Well, good afternoon, everyone. Great to be in Goa. Yeah. Well, obviously, it's been already quite an active commencement to 2026 in the energy markets. I guess most recently, in the last few days, the U.S. market has had to, take into account loss of some shut-in and loss of production with the major winter storm that's taken place there. That's that's very fundamental, weather-driven, etc. But as you alluded to in your introduction, really last year was dominated by geopolitics and headlines, and the beginning of this year was dominated by the same, in particular the capture of Maduro in Venezuela and what that may mean for the energy markets. I think looking forward, there's obviously been an uptick in prices over the last week or so. Again, principally maybe because of that storm, but looking forward, coming into the year, Vitol and I'm sure some of the companies represented on stage here today saw the market as largely oversupplied. Now, where we may differ, and analysts may differ, is how oversupplied that market may be. And it's undoubtedly heavy. We do see a build up in oil on water, but I think key to that is where are these stock builds taking place, particularly on crude oil. We see them taking place perhaps not in the pricing centers, which is key, and maybe more on water or North Asia, etc. And so, what does that mean? We know the market has had to contend with a huge shut-in of the CPC Kazakh crude, and so that's really had an impact on the immediate build-up in stocks, because we forecast somewhere north of 40 million barrels of exports were lost from damage around CPC, and therefore the first half 2026 build is probably, we estimate, somewhere along the lines of 700,000 barrels a day, whereas a lot of analysts were predicting that would be significantly more than a million at some stages. So that has put, given the Brent market, a little bit of support. And in terms of where the opportunities may lie for the Indian refiners, as you say, a build is still a build. There's still plenty of crude around. Refinery margins are quite healthy,
Yeah.
and demand for transport fuels within India itself, but in much of Asia is still very healthy, and therefore, what capacity is available, and there's significant capacity builds coming in India through 2026. I think it's the buying power really of that excess crude that's on the market. It's the big opportunity for India.
Super. Sounds quite interesting. And moving from one oversupply market to another, and let me switch gears to LNG. Patrick, you've been looking at LNG globally, and from your vantage point, the next year and 2026 is going to be fundamental because of the surge in supply, mostly coming from the US and Qatar on LNG, right? So, from that standpoint, if I can ask you, how does this shape the pricing for LNG going forward, especially for countries like Europe, China, India, where LNG imports are sizable? And what kind of trading strategies has Total Energies, for example, adopted going forward as you see this new supply dynamics?
Okay, so thanks for the question. Before entering into the core of the answer, what I would like is to make a kind of introduction in a sense where through all the conferences, gas conferences that I've attended, there is always every year not a mantra but a keyword. It has been in the past security of supply. Then it was some other years flexibility, physical flexibility of the cargoes. Then it has come back with security of supply because of the crisis that we know of Ukraine. And now I think that everybody will agree that there is only one keyword on every mouth. It's uncertainties, unexpected events that are popping. If it is not every single day, it's at least every week. That can have an impact on the market. So, I mean, in this, it's definitely a new environment for, I think, for the LNG industry and the stakeholders. That you can call it disruption or news, twins. But at the end of the day, it has definitely an impact, and it is obliging all the players to show some, I would say, flexibility, agility, and the key word of this year and the last year, I would say that it's optionality. Optionality, why? Because I mean, in an environment that is not certain and moving all the time, too many times, you need to adapt. And if you don't have this capability to adapt through optionality that you can have in your portfolio, you can turn being at risk. So that's what I wanted to highlight as an introduction. To come back to the new wave of supply that we will experience, I think first it's a good news because I mean our LNG industry has suffered so far, and still it's a growing market, but still emerging market. It's not a mature market. And in a non-mature market, you're always welcoming every component, every players that is bringing liquidity. So, I mean, this new flow of volumes will bring more liquidity, which is needed in this LNG industry. And it will, of course, impact all the stakeholders in a sense where the best way is what I was saying before, to manage this new environment. I think it's to have an asset-based trading approach. Meaning that I was telling before that you need optionality in your portfolio. This optionality, you need to build it It's not overnight. You gain these assets through, as examples, you need regas, gasification capacity nowadays to adapt. You need a fleet to cope with the new logistics, Suez Canal open or not open, and this kind of event, again, geopolitics. And you need also in this asset-based approach some long-term contract that can anchor your portfolio. I think I took a
Super.
bit of time.
Thanks, Patrick. Just taking cue from on the same point, right, Sachin, from Trafigura standpoint, if I take a cue of what Patrick said, which is asset-based optionality going ahead, and this was for LNG. We talked about Brent. So how do you see the market? And you've talked about partnership as a theme as well. So if you can elaborate a bit about your outlook and how is Trafigura and your company doing about bringing optionality as well as resilience in your supply chain?
Yeah, sure. Good afternoon, and thanks for this opportunity at the India Energy Week. I mean, I'll take 2 minutes, maybe to little bit highlight what Trafigura is doing in India, because I think that is more important. I mean, Trafigura as a company operates by and large in four buckets. One bucket is oil and gas. Then we have metals and minerals division. We have a gas, LNG, and power trading division. And the fourth bucket is what we call as the bulk division, which basically is thermal coal, coking coal, and iron ore. India, we as a company are very bullish India in terms of the energy requirement that India has. And not only in oil and gas, across all the buckets, we see massive opportunities in India, and we are supplying all these commodities in India, either in a CFR model, but we also have uh, introduced another model, which is a cash and carry model, which is mostly on the metals and minerals business, to remain much closer to the customers. Uh, what basically partnership means is that from our perspective, we have to be very, very close to understanding what customer needs. Trafigura as an energy trading company predominantly is a key logistics solution provider and a shock absorber. As today, we are operating today in a very volatile world, and you just don't know the next day morning how the world would be, how the prices would behave. That is where energy traders like Trafigura can bring in a lot of partnership, tailor-made solutions to the customers through its global presence. We operate in more than 50 offices globally. We have geographies closer to 150. Our market intel, our swiftness in moving towards any sort of a decision making is much faster than anyone else. So that enables us in being much closer to the customers, providing the right solutions, and that has helped us in creating a lot of partnerships in India. We have signed a 5-year deal with one of the national oil companies in India on LNG. We have recently signed a crude deal with one of the NOCs for the next financial year. And I don't know, many people may not know, India is the largest Trafigura office globally. We have more than 1,000 people, and our global operations for Trafigura, at least 50 to 70% is being run out of India. So our commitment to India, the energy requirement that India has, and it is not only limited to oil and gas, it is also metals and minerals, coal, coking coal, iron ore, shipping solutions, all that put together, I personally feel that we are very rightly positioned, and it is for India to take that as an opportunity how we can create more partnerships in the country.
Thank you, Sachin. Fabian, maybe a question for you. Of course, CEFE sits at the intersection of state policy and market operations, right? And given the use of energy supply deals as a strategic lever, how has this role of state actors, changed in this trading market globally? And do you think this state involvement creates new avenues for commercial players in this market today?
I think short answer to that is yes. Why I say that, I think state actors used to be more of a point A to point B business, security of supply. But increasingly, we see a lot of state actors in Asia, globally as well, setting up their trading capabilities and trading arms. If you think about it, size matters in the trading game. All right, margins are getting compressed, and let's say you have a 20, 30 million ton portfolio, especially with the flexibility of contracts. A lot of these state actors, not just Germany itself, but most players in Asia have set up their trading arms, or have already set up, or in the process of setting up. All of them have offices in London, Geneva, trading some of the, optimizing some of their global volumes, going to Asia as well. So that's one thing. We also see the state actors getting more and more sophisticated. I think some of the biggest financial players in Asia are from some of the state-owned companies, leveraging off some of their, I would say, oily expertise before. We do also see some partnering with some of the state actors together with the private ones as well. Take CEFE, for example. We have quite a huge regulatory affairs team. So we are quite plugged in with EU policies, decisions. Actually, I'm saying this, one of my colleagues is from there, sitting in the audience. So I think in today's trading world, there's a lot of sanctions, compliance, vessel sanctions, route sanctions, KYCs, AML. So sometimes it is quite useful to be plugged into the entire policy machinery to understand how this may potentially affect your portfolio, how it may affect your trading systems. So for us also, we are quite strong in Europe. We also see the need to balance some of our supply-demand requirements. And it's not like you have X, you kind of contract for X, and you don't know how the weather is like, what your downstream consumption is like. So for us, we like to partner with some commercial players out there. We also like to partner with some of our Asian players who are strong in Asia itself. And I think in today's world, because of the increasing fragmented world order, these G2G partnerships under a package, or even G2G with some of the key commercial players out there, are pretty key to just to keep the conversation going, especially if, like, I come from the perspective of LNG is a global commodity.
Thanks, Fabian. Well, shifting gears a little bit, moving towards geopolitics. Kiran, if you can ask you about US and US's role in terms of, it was perceived as a pro-transition in some shape or form, but that was a few years ago. There have been policy reversals. There has been a slowdown in the clean energy space. There's a renewed emphasis on fossil fuels and its export strategy. So, how has this shift sort of changed the rollout of renewables, EVs, in the Asian markets globally? And how does this impact, the future of investments and, more importantly, trade flows as you see it?
Yes, well, you're right that there has been somewhat of a policy shift since the new administration came into the US. I'm not sure it's had that in of itself has had a huge impact on the sort of Asian renewable penetration into the market, etc., like that. I think that was proceeding at a fairly significant pace anyway. China's reliance on solar and renewables has certainly accelerated over the last few years. Now we do see somewhat of a plateau in the EV penetration in China, but if you think, if we stick with EVs for a second, we look at total new car sales globally in 2025. 15% of those were fully battery powered. In India, only 5% were battery powered. So that what we would sort of look at and see as an opportunity is that there's huge upside in that. Now, as you say, the US has pivoted somewhat back towards fossil fuels, but with that, a huge amount of the fresh LNG production that's scheduled to hit the market over the next couple of years, aside from significant amounts in Qatar, is also coming from the US, and therefore, by its very nature, there should be a lot more affordable LNG available to the market, in which India can procure at better levels, and therefore support support that renewable market. Now, part of that obviously requires infrastructure, and India's gone a long way in deploying city gas, which is of course taking away from LPG and other fossils. But there's more to do. But the pace at which India can develop that is pretty much unmatched globally, and therefore there's a huge opportunity in that regard. But what we would see is a slight difference. What's happening east and west at the moment on the renewable front, but in of itself, China and India are world leaders in terms of the growth in those segments.
Very interesting, Kiran. If I can take the point forward on new emerging areas of trade, and Sachin, maybe a direct question to you would be, as you operate from an Indian standpoint, where do you see these contradictory opportunities come up over the next 2-3 years? There's LNG on one side where supply is increasing. There's EV penetration, as Kiran is saying, there might be saturating. India, of course, has a growth potential in electric and battery space. So, do you see contradictory opportunities? Do you see risks in this long-term view on these commodities? Talk about that.
Yeah, see, if you look at India, and I agree with Kiran, that if you look at the EV penetration in the country, it is, I think, 4 to 5%. Our internal analysis is that we are not even close to any inflection point in India in terms of EV transition. What we are seeing in China, India is totally opposite of that, at least for the next 10 years. What does that mean? Today, India's oil demand is roughly, say, somewhere around 5 million barrels per day. We feel that by 2050, this oil demand will be closer to 9 million barrels per day. And what is contributing to this demand is the strong diesel demand, gasoline demand, LPG demand. LNG normally is not included in this demand, but of course, India is going to buy a lot of LNG. But sometimes we also miss a couple of other products when we talk about the India's energy demand is the bitumen, is the base oil, which India imports. Huge quantity. India is almost among the top 2 importers of this commodities globally. And at the same time, with the amount of infrastructure development that is happening in this country, the demand for metals, whether it is copper, aluminium, everything is growing in double digits. So, and at the same time, India is doubling its steel capacity from roughly 150 million tons to 300 million tons. What does that mean? That India needs more and more of metallurgical coal. So when a country is growing at this sort of a rate, and that is the requirement of energy in the next 25 years, how do you meet that requirement? One is you continue to operate in a current traditional way, which is more of a procurement through a tender process. I personally feel that this is an area where India has to rethink. We do business globally. We have a lot of businesses, for example, we do in Korea and China. A lot of these businesses are concluded on bilateral basis. So, I mean, tender process has been more of a legacy issue in India, but I think this is an area where India should start thinking that there can be a lot of structural partnerships that can be done in India to meet this growing demand. Otherwise, the way the market is moving, the way world has changed, and the way today, things change all of a sudden. Like, we were talking about the Brent prices, we were talking about the weather conditions in US. 2 months back, this was not the weather which was anticipated. All of a sudden, you have to change your strategy. So I think India is such a big growth engine with a very big base, 1.5 billion population. It's a consumption story. To meet the requirement of this energy, India has to change a little bit on the way it procures its energy. And we are seeing those changes, and I'm sure the customers are also seeing the benefit of it. And that's where people like us play a very important role, because we are able to move fast. We are able to bring solutions or the tailor-made solutions to the customers much better than anyone else. So yeah, I guess there has to be some small changes to meet this growing energy demand, and this will be for the benefit of India.
Right.
Thank you.
Right. Um, Patrick, interestingly, what we are seeing is, markets, they've stopped behaving like markets and started behaving like policy instruments. The world energy is no longer neutral, and with evolving dynamics on all fronts, whether it's geopolitics, whether it's energy security, new energy coming up. From your vantage point, since you've been in this business, what has not changed? While we talk about change, we're talking about disruption, but if there's something that has not changed so far, what would that be?
What can be always sustainable? It's the law of the supply demand and the balance of what can be produced and what can be consumed. I mean, what you need to do nowadays, it's to benefit from this moving environment, either the threats or the news, to get more resilient and to gain in resilience through, again, from a trading perspective, through optionality. But I mean, what will remain is the rationale of this supply-demand balance. That's the reason why we were talking about the new flow coming on the market. I think in this energy transition period, which is ours, we will have more volume, so it will be for the benefits of an LNG commodity that will become more affordable, cleaner, affordable, sustainable, for the benefit of the end users more than ever in India.
Kiran, if I can ask you that, and Fabian, I'll come to you next on the same thing. How do you see India market, and any change you want to bring about on policies, infrastructure reforms that Sachin alluded to from an India market standpoint? What would that be?
Well, I think it's actually taking place. I don't think it's particularly new or needs implemented. As Patrick alluded to there, there's a lot of import infrastructure on the LNG side. It has been and continues to take place. With that, we're seeing a lot of development within the grid itself. Again, there's more room within the cities for households to get connected to the grid, etc., like that, and that in itself opens up avenues for further gas imports, cleaner cooking, etc. And so I think it's already happening. We see it in the growth numbers, and so we see that continuing. But the market is evolving. Sachin alluded to there the oil demand growth as well. And with that, if there's another 500,000 barrels a day of refinery capacity coming online this year, outside the usual sort of maybe summer seasonality on exports, largely the products that are derived from that capacity are going to be consumed within the country itself, and there's the country remains short on petchems. And some of the new technology and integrated refinery technology means that India will go a long way to become a lot more self-sufficient in that sector.
Super. Fabian, on the same topic, right? I think we all generally agree that at some point in time, we might just be the last surviving major economy still dependent on oil. So our last drop of oil is at least 15, 20 years away in India. Gas continues to grow, and there's, of course, EVs. And from an India/Asia standpoint, Fabian, any inputs you have in terms of changes from a policy standpoint, or changes from an infrastructure standpoint that can benefit India as a demand hub?
Well, I'm no expert on India, so can I pass the question to someone who is more expert in India? Anyone?
Sachin, you might want.
I think I already answered that question, but difficult for me to comment anything on the policy front. But I think the broad message is, we all by and large agree, whether you talk about LNG, whether you talk about any other energy, in whether it's crude, whether it is bitumen, whether it is petrochemicals. India needs to import a lot of energy. Yes, we are adding more refining capacity in the next 4 to 5 years. Uh, but at the same time, if you look at the last 1 year data, I mean, LPG demand has been so surprising for us. I mean, LPG demand on a very big base has grown by 5 to 7%. And whatever is this incremental demand, it needs to be imported. Similarly, if you look at diesel on a very, very big base of closer to 90 million tons, India is growing at 3 to 5%. What does it mean? 3 to 5% on 90 million tons is roughly 3 to 4 million tons of additional diesel demand. It's huge if it were to continue like this for the next 10 years. Gasoline, again, India has been growing at 5 to 7 to 8%. By and large, it has been able to absorb the shock of huge increase in gasoline supplies because India has very successfully implemented blending of ethanol, which is now very closer to 20%. So I think more than the policy side, I don't personally see that as any major constraint. It is more how you change the mindset in terms of procuring this energy requirement that India has. We talk about LNG, most of the LNG contracts are long-term contracts which are being discussed in the country. These are not easy contracts to do and easy contracts to operate, the risk on these contracts. Uh, so I think a little bit of a mindset change and a little bit of a process change can help India in meeting its energy demand in a much more efficient way.
Right, right. So, Fabian, let me then come back to you on a new topic, right? So, I think decarbonization is, of course, topic we keep talking about, and interestingly, a few molecules have started appearing in the global energy flow. Green ammonia, it's talked about as the sort of next sustainable fuel. Biofuels, you talked about ethanol, but there are more SAF in the picture, and other carbon-linked products have also started seeing trade across regions, right? So, Fabian, from your standpoint, how do you see these new products emerge in the conventional energy trade flows, and risks, opportunities from that standpoint?
I think the hydrogen and green ammonia conversation has been going on for quite a while, and people are starting to find that it's not very commercial in nature. For it to become, I would say, a persistent part of the overall energy mix, I don't think it can rely on government subsidies. Uh, it needs to hit critical mass, it needs to hit commerciality on a standalone. Say Cefe, for example, we do have a hydrogen and clean energy team. We have about 200 BCM equivalent of downstream, 200 terawatts equivalent, or 20 BCM equivalent of our downstream demand. So we have been looking to see whether our secret sauce is aggregating some of the demand of our retailers, our end buyers, to see whether they want to switch some parts to some low carbon equivalent. It is still a very small amount. We did look at importing some green ammonia, but the cracking, post cracking, and then sending it into the pipeline itself, I think commercially is still very challenging without a clear view on government subsidies. Um, we are also looking at local electrolyzers, hydrogen, putting in a pipeline. So in short, putting it, getting, changing it into green ammonia for shipping, and then cracking it at the discharge port and putting it back is just commercially not very attractive currently. Um, so we do try not to be a trailblazer in terms of these, I would say, decarbonisation fuels, but we do think there is a future for it. So we are really looking very closely at it. We want to be more of a kind of a trailblazer in approach. Maybe start off with small scale projects, not the big 1-2 million tons equivalent. A proof of concept before we kind of I would say go full swing into it. So I mean that's a very long answer, but it is about it will be part of the energy mix, but to scale up to the levels which some reports out there are saying, I think some are saying like 10%, 15% by 2050. I think maybe a little bit difficult, challenging for now.
Right. So some skepticism there.
Don't say that.
That's fine.
My German government ministry might be listening to this.
All right. Kiran, what's your point of view on the same? Do you agree with sustainable fuels not scaling up, as anticipated? How do you see from your vantage standpoint?
Well, I guess I think it's you can't sort of throw a blanket over all of them. Over the last couple of years, some of the price points have been a barrier for certainly for investment in some areas, and therefore in some of the areas that just spoken about, we've seen it mainly been the large utilities or Middle East national oil companies that are exploring these areas rather than smaller private companies.
Yeah.
But then there's other sort of sustainable areas where there's policy. SAF, for example, where airlines are going to be mandated in certain parts of the world, whether it be 1 to 5% up until pathway up until 2035, and again, that was very prominent for a few years. It sort of faded into the background, and now that some of those mandated policies from governments are coming into play, then SAF is back in the headlines again, and where that's going to be produced, where it needs to be injected into the system, etc., it becomes quite prominent again. So I don't know. There's a little. I don't want to say that they become a little bit in vogue and then disappear, but price really matters when it comes to these sort of things.
Right. Patrick, any viewpoint on sustainable fuels?
No, I think it's a part of the energy transition. But I mean, that's you need the participation of all the stakeholders in order to make this segment of the energy industry profitable, because eventually it's what will be at stake. And again, to put the proper regulatory frame, because it has definitely an impact on the profitability of this kind of business.
Super. Sachin, last thoughts on sustainable fuels from an India market standpoint. How are you prepared for it? What is it that you're doing from a global energy standpoint?
Yeah, I mean, from India perspective, when we talk about sustainable fuels, of course, we have a couple of upcoming green hydrogen, green ammonia projects, which might be coming online by 2028, 29, that sort of a time frame. There are a lot of challenges, as you know. I mean, it's not a easy area to operate in terms of economics, in terms of able to export these molecules. I mean, you're able to export when there is some sort of a policy change into the country where it is going to get imported. Otherwise, it becomes very difficult to justify that sort of an economics at which they get exported, because there are already alternate fuels. You have green ammonia, but at the same time, you have abundant of gray ammonia also available. But I think what we are seeing in India is definitely a lot of opportunities related to biofuels. And when we talk about biofuels in India, ethanol has been a very big success story. But I don't think so biodiesel has been a success story in India, because to produce biodiesel in India, we do not have enough aggregation to produce that quantum of biodiesel, because the base of diesel is so huge that to blend 5% biodiesel, you need 4.5 million tons of biodiesel. But that's the area where we definitely see opportunities both on supplying feedstock into the country and also exporting these barrels out of the country. So for us, on a sustainable fuel side, one is this, and then at the same time, India also produces a lot of tire pyrolysis oil, which is available in abundance in India. But the problem with this fuel is to place this fuel into the refinery system, it takes a very long period for refineries to accept. So yeah, on the sustainable story, one side of the coin is green hydrogen, green ammonia, but I think the low-hanging fruit, I would say, would be more on the biofuel side, which can be biodiesel, supplying of feedstock, and uh, buying biodiesel out of India to be exported to Europe and other destinations.
Right. Thanks, Sachin. I'm mindful of time. I'm sure we have more questions and we'll continue going. I'm going to spend the last 3 minutes with a rapid fire, and it might just be able to do one rapid fire. So if I can request you to just answer it in a sentence or so. So what is the single biggest trading opportunity you see emerging in the next 3 to 5 years? Fabian, maybe I can start with you.
Well, I think it's definitely India for sure. Not because we are here, but India is a huge growth market. And post EU-India trade pact deal, I think there's a lot of more opportunities for energy collaboration as well.
Right. Patrick?
I will remain, as a wrap up, I will remain global. I think that if you focus on the trading that I'm a representative of, the best strategy, taking into account what we were talking about during all these panels, I mean, it's to keep an integration throughout the value chain of the gas, remaining global through this integration. The importance, I think, and it might have been discussed in some other panels, but I think digitalization is key. With all this artificial intelligence coming, I think we are estimating the impact at any level. That's the second aspect of a winning strategy in trading. And the other one would be to also to think, and you will be sensitive in this audience, what is all about trade finance. It's not addressed in a lot of panels, but I think it's important for the end users, for the counterparts, to have the best credit terms to run their business. And last, winning strategy with as far as the trading is concerned, and it is the case in India. I think it's to find the key alliance with a partner, an Indian partner in this occasion, in order to develop your portfolio and to make it stronger and to work together.
Thank you. Sachin, biggest trading opportunity?
Yeah, I think it's a little bit difficult to answer that question because there are so many opportunities in the country. But I think if we have to pick one, then I would definitely go with LNG, where we definitely see a lot of opportunities in the country because India will import a lot of LNG. The domestic gas production also, where it is, we don't see it to be rising much. But at the same time, we see massive potential in India, also on the petrochemical side. I would definitely add bitumen and base oil to it, which we normally don't talk about it. And definitely, we are very constructive metals consumption in the country, and we have a massive portfolio of metals book globally. So if I have to rank, then definitely LNG comes at the top.
Right.
But then again, there are many other products where we see massive opportunities in the country.
Right. Last thoughts from you, Kiran, on trading opportunities next 3 to 5 years.
Like Patrick, I'll keep it more global, but I think assets.
Assets.
And with that, I think at the current price point of both crude and LNG, the environment for the trading community without assets is incredibly competitive, and therefore, without assets, those that are trying to forge their way or stay towards the top of the ladder, etc., versus those with some assets are going to find it a little difficult. But with that also is the advances in technology and AI over the next few years will be significant, and therefore those with assets can fully embrace those advances and push ahead.
Right. Well, thank you. I can see we are running out of time. I'm sure we would have continued the debate and discussion. But thank you, panelists. Thank you for dissecting this complex topic and also showing us where the opportunities lie ahead. Thank you.
Thank you.
Thank you.